In today's video, I have a tiny microcap stock that is beginning to make big moves after recently listing on Nasdaq. They've had some big news in the past few days, several upcoming catalysts which I will talk about later, and the company just announced another record-breaking revenue quarter. In fact, their revenue is over 10 times what their market cap is. In today's video, I will be talking about IQSTEL. This company only listed on Nasdaq 2 weeks ago. Nasdaq ticker IQST. Since going public, the great news keeps coming, but somehow the stock is still flying under the radar of most investors. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get into it. IQSTEL is a US-based multinational technology company providing advanced solutions across telecom, high-tech telecom services, fintech, AI-powered telecom platforms, and cybersecurity. They offer leading-edge telecommunications and technology services, and they're strategically optimized a high-growth portfolio of innovative technology companies operating across a diverse market worldwide. The company's vision is to become a $1 billion revenue multinational technology company by 2027, with the investment goal to fuel potential by empowering technology that generates substantial long-term value for shareholders and customers. IQSTEL has a global footprint, with operations providing access to diverse and high-growth markets, mitigating risk and, as it says here, maximizing investment opportunities while enabling us to leverage local market knowledge with a global perspective. And this is a truly global perspective, with 6 offices around the world, operating on 4 continents, serving more than 20 countries with over 100 employees. And they have partnered with some of the world's leading companies too, which I will talk about in a moment. This company has a clear path to success with strong revenue growth, moving them closer to the goal of becoming a $1 billion revenue company. Now, usually when I see something like this, a goal of going from a penny stock with a few $1 million of revenue up to a $1 billion revenue company, I would be skeptical. But I've followed IQSTEL over the past few years, and this company really is growing their revenue year after year. But the share price hasn't reflected their revenue growth. So before I look at the investor's presentation, I just want to look at something else first. IQSTEL reported $57.6 million in Q1 revenue in its first Nasdaq shareholder letter and reaffirms its path to $1 billion by 2027 as their global tech evolution accelerates. So in this letter, CEO Leandro Iglesias details the company's performance, strategic vision, and transformation into a high-tech multinational on course to reach $1 billion by 2027. Now, just looking at the important points here, they recorded $57.6 million in revenue, $1.93 million in gross profits. Their margin is up 25%, up to 3.36, and they have the strategic goal to reach $400 million run rate by year end. And the CEO highlights something that you'll know if you follow the company. They have just recorded 7 years of consistent performance and growth on the OTC markets, but now they've uplisted to Nasdaq. This places IQSTEL on a global stage with enhanced credibility, visibility, and access to institutional capital. Now, if you're unfamiliar with the company, then this press release goes into great detail and all their achievements and future outlook, so everyone should really take a look at this. There is a link to this in the description below, or you can pause the video and look at it, but I won't be covering everything. They have a track record of delivering on promises, building a scalable high-tech growth engine. And for full year 2025 financial and operational objectives, as you can see here, they are aiming for $340 million in revenue with 7-digit net income and a year-end run rate of over $400 million. But they are also actively pursuing acquisitions in telecom, fintech, and cybersecurity, as well as focusing on targets that contribute to positive EBITDA. Now, on this note, the company just released some pretty big news, but first, let's look at the investor's presentation. Now, we've already seen that this is a global company, and that they plan to become a $1 billion revenue company within the next 2 years. But IQSTEL have evolved from high-tech telecom infrastructure roots into a dynamic technology conglomerate with several subsidiaries spread across their 3 main business focuses: telecom, fintech, and intelligence. This diversification has been fueled by a combination of targeted acquisitions and organic growth, allowing the company to expand their market presence and create more exciting opportunities. Now, as I said earlier, they have been growing quarter after quarter, year after year, and the revenue per share has increased from $30 per share in 2020 all the way up to $111 by 2024. To date, IQSTEL has completed 11 acquisitions and ventures and continues to develop an active pipeline of potential future acquisitions. And we can see this here over the past 7 years. They have developed cross-selling opportunities to optimize cost and operational efficiencies, which has seen an incredible growth trajectory over the past few years, ultimately leading to them achieving $282 million in revenue last year. But IQSTEL counts some of the world's largest companies among its customers, such as Verizon, Vodafone, T-Mobile, and Orange in the UK. This is an impressive list of customers for a small $25 million microcap company. But it's the company's vision that's most impressive. By the end of 2025, IQSTEL is committed to debt reduction, cost efficiencies, and strategic acquisitions, targeting the $400 million revenue run rate. And this is incredibly important because one of the most important things about this company right now, because IQSTEL grew their revenue over the past 2 years, they need to improve their margins, in my opinion. Back in 2021, IQSTEL grew their market cap to over $137 million on just $64 million of revenue while being an OTC company. And this is important because there is now a huge disparity between revenue and company valuation, because today's revenue has grown to over 4 times this at $283 million, while their market cap is now only about $24 million. And the company is no longer an OTC company, now it's a Nasdaq listed company. Now, I think it's important to mention here that the company did perform a reverse stock split in order to meet Nasdaq listing rules, because the share price was under the $1 Nasdaq minimum. And like all reverse stock splits, this was viewed negatively by investors. But this needed to be done. Over the past 3 years, IQSTEL management have said they wanted to grow the share price organically to meet Nasdaq rules. But over the past year or two, they have issued many statements stating that the share price does not accurately reflect the company's growth. So this was kind of a necessity for IQSTEL. It was either do the reverse split and uplist to Nasdaq, or do nothing and remain on the OTC, where it could take years more before the share price rises. Nasdaq brings much more visibility to the company, and not only that, but there is a lot of investors, especially institutional investors, who do not have access to OTC companies that will now be able to access IQST stock since the uplist. It's not ideal, it's not what we all wanted, but it was necessary to continue the company's growth. And just today, IQSTEL announced another step towards their expansion goals with the acquisition of Globetrotter.com. Now, this had been in the works for a while, following the signing of the Memorandum of Understanding 2 months ago on March 21st. Globetrotter has recorded strong growth to date and is planning to generate over $65 million in profitable revenue in 2025 alone. Its financial outlook over the next 3 years reflects steady growth and operational momentum. Now, I already mentioned about how IQSTEL is growing the company in such a way that allows for great cross-selling opportunities. And just look at this. Our goal is to take Globetrotter's fintech products and services and scale them globally through IQSTEL's platform, which already reaches over 600 of the largest telecom operators around the world. In parallel, Globetrotter's existing client base, including prominent multinational brands, opens the door for IQSTEL to expand its reach into new sectors, allowing deeper penetration into the enterprise and global brand markets. In general, this allows convergence between fintech and telecommunications in high-value markets across America, Africa, and Europe. Now, the transactional highlights are here. This deal was done quite cheaply at less than $1 million, but the deal is also performance-related over the next 2 years. Should they continue to impress, IQSTEL plans to invest up to $1.2 million over the 2 years, provided that Globetrotter meets specific financial targets. Now, I think this is the right way to structure any acquisition deal, but what do you think? The global fintech market is expected to grow to $1.4 trillion over the next few years, while the global telecommunications industry is already a multi-trillion-dollar industry and growing. IQSTEL are actively growing in both of these now, heading for a massive $1 billion in revenue. This stock has been severely beaten down right now. Personally, I think this is because they have sacrificed margins with the goal of rapid expansion. But if these margins improve and the company gets to $1 billion in revenue, then the current share price might just be a tiny fraction of its future share price. But that's just my opinion. Let me know your thoughts below. Remember, I'm not a financial advisor. This is not financial advice, so I highly recommend you do your own due diligence. Thanks for watching, and I'll catch you in the next